Hey guys, it is Julie here with JT.Wealth. Today we are talking about a few growth stocks that have some great potential. So let's get into it. All right, guys, welcome back. Before we get into it, just a reminder to make sure that you hit that like button and that you're subscribed to the channel so that you can stay up to date with all of our latest videos. Some other news, since I have been asked about my lovely whiskey decanter several times, I have shared my Amazon affiliate link down below if you're looking to find that same one. If you're considering opening up a new brokerage account, also in the description below are my links to Robinhood, M1 Finance, and Webull. For the M1 Finance, you get $10 for free just for your initial $100 contribution. So that's a guaranteed 10% return. Okay, now on to today's topic. So we have three new great growth stocks that have been getting a lot of attention lately. Those are Nvidia, Vivint, and Teledoc. We are going to go over each of these and just quickly touch on who they are and what services they provide, plus some highlights and recent articles on their growth, earnings, and that future potential. First up is Nvidia, and their ticker is NVDA. Now, Nvidia invented the GPU, which is a graphics processing unit, and it's used for the gaming and professional markets, and they also have a system on a chip units for the mobile computing and automotive market. Their latest chip, the Ampere, is used in large data centers. Now, this has been a huge area of growth for Nvidia as it is set to rival their revenue from their gaming GPUs. Now, this MarketWatch article continues on to cover how this upcoming second quarter earnings report, so that is coming up on Wednesday, August 19th, promises to usher in an era of firsts for the chip company, the most significant being formally shedding its past reputation as being primarily a gaming card company and fully embracing its role in shaping data centers. So this quarter will be the first to capture the sales of Nvidia's new data center products like that A100 graphics processing unit. In this portion, you can see we have two different analysts who have significantly raised their price target, both coming in at that $500 mark, which is pretty impressive. And Bryson said that his checks suggest the demand for Nvidia's GPUs exceeds the supply. As a result, that should definitely yield a strong outlook for the third quarter. Also, back in July, Nvidia surpassed Intel Corp as the largest US chip company by market capitalization. So that is pretty impressive. Now, what to expect from that earnings report? We're looking for a post-adjusted earnings of $1.98 per share. So that went up from the original $1.77 at the beginning of the quarter, and a revenue of $3.65 billion. Now that is up from $3.11 billion forecasted at the beginning. So some increased expectations there. So if we take a look at Nvidia's chart for the last year, you can see that it's definitely not the most affordable stock on the block and has been trading around $462. On an interesting note, Jim Cramer from CNBC's Mad Money recently put out a list of 10 stocks that he would favor seeing a stock split from, and Nvidia was one of them. Now, definitely not saying that this is going to happen, and there's been no indication of Nvidia from it, but if it were to happen, I think we would see a big increase in Nvidia's stock price, as we know how excited the market gets over these stock splits. We've seen it with Tesla and Apple. So taking a quick look at some price outlooks, our average price coming around $420, but a high of $520. And you can see on the left, we have a strong buy rating with 26 analysts rating it as a buy. Looking at our stock analyst overview, you can see there has been some decreased hedge fund activity and some insiders have sold some shares, but overall we're having very bullish, very positive outlooks and that strong buy consensus. Next up on our list is Teledoc. Their ticker is TDOC. Now, Teledoc is a telehealth company, and given the interesting quarantine that we've been going through, these guys have seen a lot of success as remote virtual doctor appointments are gaining popularity. Now, moving forward, even further growth is expected as they just announced a merger with Livongo. So we have a lot of information in this article here. So Teledoc recently released its second quarter numbers, reporting year-over-year sales growth of 85% for the 3-month period ending June 30th. The number of virtual visits conducted through the platform grew from 908 million in the year prior to nearly 2.8 billion. That's an incredible 203% increase. So there is still room for the company to grow, especially with Roni still becoming a bit of a problem. And that growth rate, probably not sustainable over the long term, but it's not unreasonable for double-digit growth to continue indefinitely, given the pandemic and patients' desire to minimize unnecessary travel. And like we said, they also made headlines with their merger with Livongo Health. So Livongo focuses more on readings from home, specifically like diabetes, reading those glucose levels and everything. So this deal is going to extend Teledoc's reach into forming patients' day-to-day health habits and opens up a new consumer base. Now, the pandemic has definitely sped up the inevitable here, but everything in the world is starting to trend towards that digital servicing. I know I hate sitting and waiting in the doctor's office for my appointment. So obviously I would rather be able to sit at home waiting for the call. So this is a trend that we're going to see move more and more in that direction. Now, if we look at Teledoc's stock, it actually plummeted about 20% after the news of the merger came out. I think the public is struggling to understand the future benefits of this merger. Personally, I look at this drop as a great sale for the Teledoc stock. I think merging with Livongo is going to vastly expand that range of telehealth services they're able to provide. And moving forward, the healthcare industry is definitely going to be promoting this type of at-home care. Teledoc is the leader in telemedicine and Livongo is the leader in remote patient monitoring. So imagine if we're able to Skype with your doctor, but at the same time, he can be checking your diagnostics. It's pretty cool. Looking at our Teledoc stock forecast and price targets, our average price is coming around $235 with a high of $282. On the left, we're at a moderate buy right now with 12 analysts saying buy and 8 saying hold. Our stock analyst overview, we have a little bit of decrease in the hedge fund activity. We have that moderate buy, and then we have some bullish and very positive outlooks as well. Last and not least, we have Vivint Smart Home. So their ticker is VVNT. So these guys are a home security company with mobile monitoring. Now, Vivint just experienced a nice little jump after JP Morgan called it a home run. So shares of Vivint Smart Home rallied to a 5-month high on Thursday after Wall Street's most bullish analyst got even more bullish, saying that the company was a home run. So JP Morgan analyst Paul Coster already had the highest stock price target on Wall Street at $22, but he raised it even higher to $30, which is about a 58% above current level. So Coster said, "We believe growth momentum, revenue visibility, expanding margins, improved cash flow, and optionality warrant a close look at this leader in smart home solutions by tech investors." With 95% of its revenue recurring and 1.6 million subscribers and growing at a compounded annual growth rate of 15%, Coster said there is a lot to like here. Vivint holds a meaningful leadership position in the professionally installed smart home security market at a time when homeowners are making significant investments into their homes. One other neat thing to add in there is that these guys just went public in January, and they did so via SPAC, so that reverse merger. And I know we cover a good bit of those on here, so just thought that that was a good piece to know. So right from their last earnings report, we have their financial outlook for 2020. So as we mentioned before, 95% of their revenue is recurring month over month, providing that long-term visibility and predictability. The average subscriber life is about 8 years, driving significant lifetime margin dollars. Down below, a lot of their 2020 guidance has been based on better than expected second quarter results. So we're seeing some increases in their expectations there. Looking at our stock analysis, we do have a bit of decreased hedge fund activity, but across the board we have a moderate buy, bullish outlooks, a bit neutral on the investor sentiment there, but very bullish in the new sentiment. Okay, so those are 3 growth stocks that are attracting a lot of attention lately. So long term, these could be some really solid plays. There's exciting things on the horizons and definitely a lot of upside potential. As always, guys, please let me know your thoughts. What do you think about these 3 stocks? Are there some other growth stocks that you have your eye on? I always love hearing from you, so make sure that you leave a comment. Please hit that like button down below. Make sure that you're subscribed. Go pick yourself up an awesome whiskey globe decanter on Amazon. And cheers!